afternoon, this Thursday, November 11th, Veterans Day, as we commemorate and honor those who have served in the military to protect this great country and are currently serving, and those have died with distinction. For those we honor and give thanks to. So today's action, quite exciting, with French milling wheat bolting to new all-time highs for wheat prices in France before retreating a bit and closing near prior highs. So we're going to go through the charts and show the developments that are setting up and how grains are still likely have further upside potential in their movements, with breaks finding buyers. French milling wheat today, new all-time high to $300.50 a metric ton before closing just underneath last week's contract high of $297.50. Today's high, $296.75. And as you can see on the monthly charts, this did best the highs made back in 2007, and we could be into new ground here, well over $300 a metric ton, as we know Russia tomorrow is likely going to raise its taxes again on wheat, trying to get themselves to stop being the cheapest available sourcing wheat yet in the world. That's going to change, along with Australia having problems now. 2 to 4 inches of rain last 48 hours. The crop is ready to harvest, and it's drowning in rain. Quality is going to collapse on that wheat, and that helped push the Kansas wheat contract off its lows after the USDA crop report, surpassing the 60-day cycle high and closing above it 2 days in a row, which means we are setting up for more accelerating rallies. That doesn't mean like today's setback of 15 cents can't occur and we could have maybe some more weakness tomorrow, but in the end, wheat looks like it's going to track higher. Today, we achieved the 786 retracement of the 2013 highs. What I want you to note is when we stalled out prior highs, it was a 618 retracement of this, and we had talked about this earlier in the year when we made sales up against the 750 mark. Now we're at the 786 mark, so maybe we get a little bump around here for a while. It's possible. It's a strategic number, plus just shy of 850 here. This is 855. This area could be a slow bump, but I think ultimately, as we measure these moves higher, this move measures, sorry, I can't draw in straight lines, to 950. I think we will be challenging Kansas City wheat into these 950 ranges as we get into our seasonal highs, which maybe is going to take well into January yet. On Minneapolis wheat, we did not make new highs because they were well ahead of everybody by $2.70 on the spread. That spread got corrected on threats that we're seeing some blending of winter wheat into spring wheat. But as we push higher today, just shy of a 786 retracement of the prior high, we'll see Minneapolis wheat, as long as we're not breaking below today's low by more than a few pennies. Keep in mind that the March Minneapolis will come on this chart in about another week and a half. But ultimately, we think 1120 is going to be targeted. I am targeting $12, and that would be referencing the March Minneapolis wheat contract to get there. If we take our weekly continuation, we can see distinctly we have, well, there's one move up. Here's the third move up. There's a fourth wave decline, and now we're in the fifth wave. This advance was $1.50. Take that times 2 plus extension, about a 2.24%. We had a $3.50 rally. Pull back. This rally should be at least twice the length because of the bullishness of this leg here. We should see a move of what? $3. $3 off of the prior low, $8.50, which you add that gives you $11.50. Well, $11.50 with slippage yet could still push $2 if we do a matched rally of this leg. So $11.50 to $12 is our target March Minneapolis wheat, as ultimately we could see the winter wheat contracts go to $9.50. Corn today took off, went to a 786 of the prior high before dropping 12 cents into the close. Likely a 30 cents run here on the first wave up, just shy of that trend line again. A little bit of a pullback is occurring in here. This is our 30-minute December corn chart. It's amazing how only one little rippity-do here has it, the green line. Usually when they're really bullish, they keep holding the green line. When they get in trouble, they go to the purple line. When they cross, that's a short. Well, there's only been one mistake here, one mistake here. Otherwise, the downtrend line was in track, turned higher. We bought the corn on the turn higher on the March contract yesterday, took profits right near here, thinking we were going to pull back, but it didn't until today, hitting that 786 of the prior high. Now, we're in the March contract. The high today, again, 786 of this high. a pullback could likely take us to 72 to 73. We're trying to buy back at 73.5. For those that want to keep track of this, we use a 25-day exponential moving average for the green line, a 100-day moving average for the fast line. If you don't have the programs to run this, we give them to you free through our brokerage affiliate, Heartland Investor Services. We have a free trading app, Live Quotes. You can put it on your laptop. Doesn't matter if your laptop's a Mac or a regular. Doesn't matter if it's an iPhone or an Android. We have iPad support. You can call us 1-800-359-0221 for trading clients. We will give you these live quotes and trading apps. Load these moving averages up, and then you can see these during the day and watch them trade on your behalf. Moving on, soybeans, January, daily contract, 3 days up, major resistance. Again, I had said in the newsletter, 1235, 1240. More importantly, the 4-hour bean chart. We use 133 period exponential moving average here. Notice how when it turned south back in August, we would bump this moving average, then we would spike it once, spike it, then spiking a little more. Now we've really seen a lot of spiking last week before ultimately giving up. So that's why I say about 35 to 40 is your resistance with a spike factor. This is likely wave 1 off of the wave 4 ultimate bottom that occurred into the crop report. Wave 1 up, probably a wave 2 setback, and then ultimately another wave 3 push, and that probably is in early December. On concerning weather developing in southern Brazil and Rio Grande do Sul, Parana, where 30% of the beans are growing in southern Brazil if La Nina becomes a problem. In Argentina, things we have to watch for. Meal turned friendly after we had said back in October the $300 value was always a place where value year over year was good for meal. Well, with high-priced corn, they started buying meal on the crush. Bean oil has been struggling. But bean oil, this should just be a ABC bullish pullback. This is wave 1 up. As long as we don't create a fourth wave down here and make a lower low under this value, we are still friendly. So once we start getting back over 60, bean oil is going to start turning in a new trend up, and that's going to be supporting soybeans as well moving in the future. Again, if you don't have access to live trading quotes and or charting, we give that to you through our affiliate at Heartland Investor Services, our brokerage firm affiliate. And all you got to do is call 1-800-359-0221. We can get you set up with trading apps. Thanks for listening, and have yourself a profitable day.